Kya Accounts Teachings by Ramesh Kumar. Now today we are discussing cash flow statement. What is a cash flow statement? It is inflow and outflow of cash. That is, in trading profit and loss account, company shows net profit or net loss. But for making payments, scheduled payments and day-to-day payments, company needs cash flow. From where to receive the cash and to whom to make the payment. If company fails to make payment in time, then it gets bad name in the business. The proforma of cash flow statement is first, cash from operating activities. Here we are having three net items: cash from operating activities, cash from investing activities, and cash from financing activities. First we are discussing cash from operating activities. Here the net profit before taxation. Before taxation means before paying the income tax. Add non-operating expenses, that is non-cash items. First is depreciation on fixed assets. What is depreciation? Wear and tear of fixed assets or decrease in the value of fixed assets due to its wear and tears. Second, loss on sale of fixed assets. If we sell any fixed assets on loss, that is also a non-cash item. Then third, provision for bad debts. We provide for bad debts, that they are to be likely bad debts in our future. Whatever our debtors are there, on that we make provision for future bad debts when they are to be collected. Provision for taxation in the same way. How much likely income tax we are to pay. Then transfer to any reserve or fund. If we are transferring any money to any reserve or fund, that is also a non-cash item. Interest paid, dividend paid. Interest paid, dividend paid, we show under investing activities. So therefore, we will show here, there we do not show here. Less appreciation of fixed assets. If there are any appreciation, increase in the value of fixed assets, we will show here, we will subtract. Profit on sale of fixed assets. If we had loss, we were adding. If there is profit, we will subtract. Dividend received, interest received. If we have received dividend or we have received interest. Because dividend is received under financing activities, under investment activities, and interest is received under investment activities. And dividend we pay under financing activity, interest we pay under financing activity. So if our net result is coming in positive, net cash inflow, and if it is coming in negative, net cash outflow from operating activities. Now the second is cash from investing activities. If we make the investment, we purchase fixed assets or we sell fixed assets. Purchase or sale of fixed assets. Sale in plus, purchase in minus, because cash goes from us. Then we are having purchase of investments or sale of investments. If the cash is going out, we are purchasing, cash is going out, we will show in minus. And if we are selling, we will show in plus. Either you can use the word plus or minus, or you can use for plus you need not to use any sign, and for minus you will have to show in brackets. Then in order to treat the bank overdraft, either we can adjust from opening or closing bank. If we opening bank overdraft from opening cash or cash equivalents, that is, we will subtract. If it is closing bank overdraft, from closing cash or bank or cash equivalents, and or the other way we can treat it as financing activities. That is like in payments, bank overdraft. In the board question you will be given notes. Please take care of the notes, because question you have to attempt on the basis of the notes. Like for financing shares, we are given notes. Equity shares, preference shares, or loans and debentures, we are given notes. How much debenture we have issued or where from we have taken the loan. Or for fixed assets, we are given notes. Then in that case, we have to do question based on the notes. If you like this video, kindly like, share and subscribe it. Thank you very much. You can share this video with your other friends. God bless you. Thank you very much.